what if this time's not different? This 4-year cycle has existed in the S&P for like ever. In 2017, we topped in December. In 2021, we topped in November. It's almost like we're front running it a little bit. The thing that absolutely cemented it was in fact the bear market. Once we dropped below the 50-week, it was like kind of the nail in the coffin. You can see a lot of these bear markets last about 1 year. So that would put the next low sometime like late September, early October. I could see a low in the 40s. I think narratives follow price. Now it's MicroStrategy. It took 98 weeks to bottom. Care to guess what 98 weeks is after the top in 2024? It's legitimately the first week of October. I essentially think of the bear market as separated into 3 stages. I think we're in stage 3 right now. Already, I think it's okay to start accumulating Bitcoin. The printers can't come back on until you get a correction in the stock market. And by the way, we're likely approaching a correction in the stock market.
Back in the fall, when almost everyone was calling for a final blow-off top over 200K, one analyst was saying the opposite. The top is in, a year-long bear market was coming. And 9 months later, he's been proven right. Here we are with Bitcoin grinding lower, the vibe is dead, and everyone is asking the same question. How much lower and when will it end? Today, Ben Cowen gives us his answer, the price he thinks we bottom at, the month he has circled on his calendar, and why the biggest Bitcoin treasury company on earth bleeding out might just be the thing that ends this bear market. Ben has taken a lot of heat for being a bear, but he's also been more right than almost anyone. And in this video, he'll tell you when to get excited again for the next bull run to begin. Before we get started, hit that like button and share this video with one person who needs to see the charts to understand where we are. Let's get into it. All right, Mr. Benjamin Cowen, thank you so much for joining us today. It's an absolute pleasure.
Yeah, thanks for having me. Happy to be here.
Yes, so you were one of the few who stuck their neck out and said that November could have been the top, and you've been proven right over the last 8 months or so. How did you have the idea that November could actually be it when most people were calling for a blow-off top going into the end of the year?
Yeah, I think one of the things the top being October, it was like early October. I think there's a few things. First, if you look at my screen here, you can see this chart shows the ROI or the each cycle. It shows each bull market as measured from the low. So you're essentially looking at the purple line was the last cycle or the cycle we just finished, and then the green and orange were the 2 cycles before it. And I was looking at this and I was like, you know what? Last cycle, we ended on day 1,059 as measured from the low. The cycle before that, we ended on day 1,068 as measured from the low. And we were currently we had hit 1,062 as measured from the low. And I was like, what if this time's not different? You know, and what if we just top in October? And one of the interesting things is that in 2017, we topped in December. In 2021, we topped in November. And you can kind of see it's almost like we're front running it a little bit each cycle. We went from December to November to October. And that was one of the main reasons, right? And then you take this out to the next low and you can see a lot of these bear markets last about 1 year. So that would put the next low sometime like late September, early October, plus or minus a week or so. I mean, I've said October many times. That's about October to October would make the most amount of sense to me, but it doesn't have to be like that. And then the other thing that absolutely confirmed it, and the reason, by the way, the reason why we had to look at this time-based stuff was because a lot of the indicators that would predict major tops, like euphoric tops, were nowhere close to triggering. But the reason we knew to sort of focus more on the time-based stuff was because when you look at the price of Bitcoin, this entire cycle that we had was similar to this mini cycle we had in 2019. And the reason why they're the same in terms of like a business cycle perspective is because Bitcoin dominance went up the entire time of the bull market. After Bitcoin topped, there was no rotation into altcoins. And in 2019, Bitcoin topped in June. Quantitative tightening ended in August, 2 months later. So when it was October, November timeframe, and it looked like the Fed was going to end QT in December, it was like, well, look, guys, the last time the Fed did this, Bitcoin topped before quantitative tightening ended. And the narrative is always the opposite. They're like, oh, QE's coming, Bitcoin's going to go to the moon. But then what happens is QT ends, then Bitcoin enters into a bear market. So I think when you kind of couple all those things together, realizing, hey, you don't actually have to trigger the euphoric top indicators every single bull market, and then sort of deferring to time-based tops. That made the most amount of sense. And then the thing that absolutely cemented it, which made me know, basically beyond a shadow of a doubt that it was in fact the bear market, was if you look at every prior bear market going into midterm years, every time we drop below that 50-week moving average, the bull market's over, right? There's nothing, there's no, and every time we go below the 50, we then go below the 100-week, and then we go to the 200. And last cycle, we even went below the 200, and we're actually below the 200 right now. So it was like, look, this is likely happening. And then once we dropped below the 50-week, it was like kind of the nail in the coffin that Bitcoin has spent for the cycle, and to just, look towards the next year as probably being a bear market, and then trying to just preserve your capital.
And so the 4-year cycle remains undefeated, and you've said that it's the best indicator that you've found so far, right? But every cycle, people say this time is different, and thus, if you say the 4-year cycle is going to stay intact, you get a lot of hate. So why is it that this 4-year cycle has so much power?
Yeah, I mean, honestly, if you look at Bitcoin in 2026 and compare it to the average of prior midterm years, and then look at one standard deviation on that average, we're tracking it fairly closely. I don't know exactly like why it is this way. I don't know exactly why midterm years are weak. Some people sort of relate it to the halving. I don't think it has anything to do with the halving. And the reason I say that is because it probably has more to do with like the election cycle. If you look at the S&P 500 throughout many decades, it also bottoms approximately every 4 years, right? So you'll have, like 1958, 1962, 1966, 1970, 1974, 1982, and the list goes on and on. Well, this is 1978. You have 1982 right here. But you can see that major lows occur approximately, this was 78, so 74, 78, 82. Every 4 years, you get a low for whatever reason. And you might say, well, that was back in the 50s, 60s, 70s, and 80s. But even if you look at the S&P 500 in the last 15 years, you'll see that you get lows approximately every 4 years, like the end of 2022, the end of 2018. We had a low, this low over here was the end of 2014. Now, you can sometimes go below it, like we did in 2015 and in 2020. But when you go below the 4-year cycle low, it's because of a recession or a recession scare. So in 2020, we had a recession. We took out the 4-year cycle low. In 2015, the S&P barely took it out, but it was a recession scare, right? So a lot of people don't remember, but there were a lot of people worried about a recession in 2015, and it was actually one of the reasons why Bitcoin was actually struggling. Because if you think about the 4-year cycle, like look at Bitcoin. The 4-year cycle low for Bitcoin was actually in January 2015, but then we actually swept that low in August of 2015, right? So, you can see that this 4-year cycle has existed in the S&P for like ever, and major lows occur approximately every 4 years. And if you have a bad economy, then you could theoretically take out that low, but usually that just leads to a great opportunity to get in for anyone who missed the 4-year cycle low. So I'm guessing it's a combination to do with liquidity, the presidential cycle. If you're the president, if you're in power, it's a lot easier to get elected when the markets are going up than going down. And so if you really want the election year to be a good year, and oftentimes the year going into the election year to be a good year. And then the year after you get elected, ideally it's not a bad year either, because like you just got elected and people want to see change and they want to see you improve things. I guess if you had to pick one bad year, the midterm year is it's kind of far removed from the other major elections. I mean, there's obviously the midterms, but I think it has something to do with the election cycle, but I couldn't even... I don't even know if I believe that, right? Like it's just human psychology to some degree.
And what really proved to me that you were spot on with the money was when we saw the dip last month in May and how it correlated so well with the prior cycle, right? So just show that on the chart and how it lines up.
right? I mean, so basically when you look at Bitcoin and in the midterm years and the cadence of where the lows occur, they're somewhat, it's not an exact science. Like they're somewhat predictable though, where you'll have a low, you'll have your first like kind of big drop at the end of the post-halving year. So you can see those. And that is normally like the first drop where like everyone still believes the bull market is on, right? Like no one actually believes that it's over. And then you get another drop with a low that usually occurs in February. So you have February of 2014, February of 2018, February of 2022, and then February of 2026. After that, you typically find either a slightly lower low or a slightly higher low in late March, early April. So in 2014, it was a lower low. In 2018, it was a higher low. 2022 is a little bit different. Like, and every midterm year can be a little bit different. They're not always the exact same thing. But that is the cadence of finding a low around that time. And then there was a low, by the way, I guess in like early May. So instead of being like late April, it was early May. But then you'll often find lows in June, right? So June of 2018 and June of 2022. And then the final low ends up being the fourth quarter of the year. So I don't know if Bitcoin will find a low in June or not. I mean, this could be like, you know, one of those times where maybe it goes slightly into July or whatever. Like it can always be slightly different. But getting the path to the bottom is very difficult. But my guess is that the bottom will be approximately a 1-year bear market, right? So the last several bear markets have been about a year. Some, you know, this one over here in 2013 lasted maybe a little longer than a year, like 13 to 14 months. But they're all about a year. And so when you're looking at a top that occurred early October of 2025, I would say that the most likely time for a low would be around a year later, right? So that would put you in early October. And then I would say just plus or minus a week, right? So it could be late September, could be mid-October. That seems to be the most likely time for the bottom.
And when you take this dispassionate view and just say, hey, this is how this has worked up until now, so why shouldn't it happen again? It makes it so much easier, right? Because if you have the most mental anguish when your expectations do not line up with reality. But if you expect Bitcoin to go down this year, it's okay. So you're calling for October to probably be the low, and you've called out some numbers like high 30s, right? Might be that final price.
It could go as low as that. I don't think it has to. I could see a low in higher than that, like in the 40s. It's possible you go to only the 50s, but I'll tell you where the numbers come from. You know, I mean, the sort of the most simplistic way is just looking at the extent of these bear markets and seeing that they've, like the first one was 94%, the next one was 86, 87, the next one was 84, and then the next one was 77. And so just kind of going with that pattern, I was like, all right, well, the next bear market will probably be about 70% down. Call it plus or minus 4 to 5% on either side. So somewhere between, say, 65 to 75% drop. A 65% drop would put you at around, you know, in the mid 40s. You know, obviously 70 would put you in the 30s. And if it goes to the 30s, I don't think you can be bearish after that, right? Like I just don't. I mean, yeah, maybe you get a recession and maybe it gets worse, but you know, that's an outcome I'm willing to live with. You know, like I don't plan to be like the best investor ever. I'm just doing the best I can. And, you know, there's a lot of similarities too with 2018 and 2019. We already went through the similarities with 2019. Obviously the similarities of 2018 we covered as well. And in both cases, Bitcoin was finding support at $6,000. And then the actual low after we broke through support ended up being around 3 to 4K. So what if this time is just 10x that, right? So we're finding support at 60K. And so where those numbers come from are some of these other indicators like one is the realized price. So Bitcoin historically falls below the realized price in bear markets, and we haven't fallen below it yet. And it's currently sitting at around 53K. Now you might say, well, this time is different because it hasn't gone below it and we're already in June. But if you look at 2014, we didn't fall below the realized price until October. And if you look at 2018, we didn't fall below it until November. And in 2022, we actually did fall below it in June. So and it's currently at 53K. So I think we're likely going to go below that. If you take the price of Bitcoin divided by that metric, you get something that looks like this. And so you can see that it tends to bottom out after it goes below this line of 1, which is the realized price. So I think we'll likely see that. The more bearish one that I don't spend a lot of time talking about, because I don't want to be like a doomer. Like, I don't want people to, to just get depressed about where price might go. But that is something we should at least be aware of, is the bounce price. And the bounce price, you can see that Bitcoin historically goes below the bounce price as well before the bear market is over. It happened in 2011, 2015, 2018, even in 2020. And then it also happened in 2022. And, that's all the way down at, 38, right? So that would be pretty bearish if that were to happen. But when you think about it, it wouldn't be that outlandish. Now, again, the path to get there is very difficult. We don't have to go immediately there, And in fact, in 2018, what happened is that in June, Bitcoin found a low at 5,700, right? And we're really close to 57,000. And what happened is after it found that low, we rallied back up. So you can see how Bitcoin rallied to the 200-day moving average in May. It also rallied to the 200-day moving average in May of 2018. And then we came down to 5,700, and then we rallied back up to the 200-day moving average again, and then came back down. So, if you see some type of counter trend rally at some point, my expectation would be that it gets rejected at the 200-day moving average if it occurs before the end of the year. But once you get into next year, you look for the 200-day moving average to break and for us to get back above it. But for this year, I think it remains resistance. And right now, the 200-day moving average is around $76,000. So, when you think about where could counter trend rallies theoretically take you, you're always looking at that 200-day moving average.
And in your toolkit, would you say that the 200-day is one of the most important indicators that you have?
I think I think the main use case for the 200-day moving average that I use is it's resistance in midterm year bear markets, right? So in a midterm year, in a bear market, it provides resistance. Beyond that, I don't know how useful it's going to be. I mean, one of the other main use cases for it is if you look at its interaction with the 50-day moving average, and you look at golden crosses and death crosses, that can also provide some insight, but it's the opposite of what you think. What a lot of times happens when you get a death cross is Bitcoin usually rallies right after a death cross, like here. What'll happen is, okay, you get a death cross, Bitcoin rallies, and rallies back up to the 200-day, and then you sell off. And oftentimes when you get golden crosses, when they cross to the upside, right here, you can often go down for a bit before continuing the bull market. So that's the only thing I would say is at some point you'll probably get a golden cross, maybe later this year. And it doesn't mean that the low can't be in. It very well could be in, but usually when you get the golden cross, you then get a sell-off, and then the market goes back up.
And you're looking at charts all the time. And when we're dealing with charts, we have price as the ultimate truth. But then on the other side, we have narratives. And throughout this whole entire bear market, there's been so many narratives, whether it's Wintermute or Jane Street or Binance. We're always looking for an excuse for why things are
now
going
it's
here.
MicroStrategy.
Now it's MicroStrategy, yes. Yeah. So how do you weigh these two things when it comes to macro and narrative and just dealing with the price on the chart?
Yeah, I don't really care about any of that stuff because I've just seen so many narratives occur. And a lot of times, I think narratives follow price, basically. When the Bitcoin ETF launched, Bitcoin went up a lot, right, in the next 6 to 12 months. And one of the reasons that people attribute it to was the ETFs. They're the ETFs. And so when the ETFs launched for Ethereum, people thought it was going to be the same thing, right? And it wasn't. Ethereum went down a lot after the ETFs launched. And so what happened is then people started blaming monetary policy, right? Then they got on this 2019 train idea of it's because of monetary policy and because of this and that. And so that's a great example of how, price narrative follows price. Because had Ethereum gone up instead, people would have just said, oh, well, it's because of the ETFs. So I think there's obviously this desire to find narratives, and I think one of the biggest reasons why people want to find narratives is sort of rationalize why price is doing something different than what they expect, probably. And I just find that trading based on narratives is not a great thing, because in bear markets, no one cares about the good news. And in bull markets, no one cares about the bad news. The market just brushes it off. It doesn't care. There was no shortage of bad news in the bull market, right? Like, we had bad news all the time. People just didn't care. And in the bear market, we've had a lot of good news here and there. I mean, it's not like there hasn't been any good news. It's just that people don't care about it because, there's more to these markets and these narratives that we're seeing. And I think that if people just kind of like ignored the narratives, they'd actually be much better traders, much better investors. I think narratives can often, scare people out of making good investment decisions.
How many apps does it take to manage your Bitcoin? One to buy, one to send, one for Lightning, and another for loans. That's a lot of friction. Well, now there's Rhino. Listen to the end, and I'll tell you how they'll set you up with $10 of free Bitcoin. Rhino is a next-generation Bitcoin app that makes living on Bitcoin easy. At Rhino, you can buy Bitcoin with 0 fees. Get a Bitcoin-backed loan right in the app. Move cash globally over Bitcoin rails fast and easy. Automate your stacking with a DCA plan, so your stack is growing, whether the market is up, down, or you're touching grass. And it doesn't stop there. Bill pay, debit and credit cards, as well as retirement accounts are all coming soon. At Rhino, your Bitcoin is never rehypothecated. Security comes first, with biometric verification, 24/7 fraud protection, and the ability to move your Bitcoin to self-custody whenever you're ready. Click the link below in the description and download Rhino for iOS or Android. Use code Bitcoin News and Rhino will drop you $10 of free Bitcoin right into your wallet to start you on your stacking journey. Get the most Bitcoin for your dollar with Rhino.
Yeah, narratives are what fill the day-to-day, right? If you're following an asset like Bitcoin, narratives are what make it fun to go on X and talk about it and throw some things against the wall. So, I mean, the main narrative right now, of course, as you said, is MSTR strategy. Would you be willing to bring that chart up just so we could take a look at that?
I actually drew, I drew this out for several months ago. I was like, I've seen this pattern so many times before, where you have a chart that looks like this, right? You have a chart that looks like this, and what happens is, and I drew it out over here. I was like, usually what'll happen is you'll get a move up, it'll go back down, it'll get a bigger move up, and then you'll kind of capitulate, and then you'll form your sort of your lows over here. By the way, last cycle, MicroStrategy, it took 98 weeks to bottom. Exactly 98 weeks. So if you look at the range on this and you take it from the top for MicroStrategy, you can see the low occurred 98 weeks after the top. Would you care to guess what 98 weeks is after the top in 2024?
October.
Exactly. It's legitimately the first week of October. Late September. Sorry, it's 99. Let's get to 98. The week of October 5th. So for me, there's just too much confluence around like the September-October timeframe to completely ignore it. I'm not saying it has to play out like that. If we were to get a major capitulation like 40K at any point, I'm not going to remain a bear. And already I think it's okay to start accumulating Bitcoin. Normally to start accumulating in the second half of the year ends up working out, right, for Bitcoin. And if you start accumulating at 60K and then it goes to 30 or 40, and if you have the funds to buy more, that can help. That usually helps a lot. And especially it helps with dealing with narratives too, because like for example, let's say you don't buy Bitcoin at all, and then the Clarity Act passes, and then we rally back up to 75K, then people are going to be wishing they bought at 60, right? But if you just bought a little bit, then you're not as concerned if you missed out, because you're like, oh well, at least I got something before that rally. But on the other hand, if we just kind of capitulate down, then we're just, I like the counter trend rallies in the bear markets because they just give people time to make plans on how they're going to navigate stuff. When you're just dropping every single day, it's harder for people to make, rational decisions, I think.
And one thing you always say is that all these other assets, they bleed out to Bitcoin. So
right.
Why shouldn't we expect MSTR to do the same here?
I think it will.
It's showing that one.
Yeah, altcoins bleed to Bitcoin, crypto miners bleed to Bitcoin, crypto companies bleed to Bitcoin, treasury companies will likely bleed to Bitcoin too. And the reason is because of leverage and greed, and they already sold some of their Bitcoin recently, and I know that was more of like a sort of, it wasn't, they didn't have to sell, and it was more for just optics. But the reality is at some point they might have to sell something to help cover other things, to pay back clients, shareholders, whatever. I don't know. Like, I honestly, I don't fully understand all their products because they have so many of them now. And if I can't understand it in like 2 sentences, then it's too complicated for me. The issue with some of the stuff that I have is when you're offering a yield that is far greater than you could get in traditional finance, it makes red flags everywhere, because I think it's somewhat egotistical to assume that the crypto industry has suddenly figured out how to make it so that everyone can get like 13% yield, So we weren't able to figure this out for thousands of years, but then all of a sudden, crypto comes around and we can offer people 10, 12, 13% and there's no risk. Usually there is a risk. And if you don't understand it, it doesn't mean that it doesn't exist. It just means that you just don't understand it, and hopefully that, you figure it out before things drop. And I mean, the issue that I've seen is, and I hope they survive. Like, I hope Strategy survives. I don't want to see them, I don't want to see it fail or anything like that. But the reality is, like, every cycle, there's something that is doing this, where you're supposed to be holding at a certain level or is trying to stay near that level, and then it just starts selling off, and if this were to play out like some of the other ones, you get your first initial sell off, and then you kind of get some type of like rally back up, and people are like, oh, it's returning to normal, and then it finally happens. And I could see something like that happening with some of these products. And I have no interest in putting my money into these financial products, because it's not risk free. A lot of people think this stuff is risk free, and it's just simply not. If you're getting 12%, 13% yield, what are you doing now when it's down 25%, right? Like, so what if you're getting 13% yield? The underlying asset's down 25%. Now, the counter argument is, well, what happens if we just bounce back up, right? But that's not the point. The point is like, how can investors trust it if this keeps happening, right? So it's not that it can't go back up at all. You probably will have a bounce at some point. It's just that if you're going to keep losing this, then people are going to stop believing in it, because what happens eventually if it doesn't recover? And I think that's the issue, is that you're just sort of, trust is eroding. And at some point, that's going to be that honestly might be the catalyst that ends the bear market, is maybe something like one of these things really bleeding out. And again, it's a process. You shouldn't expect it to play out overnight.
And one thing that we've seen in the cryptoverse, as you say, is that leverage is the widowmaker, right? And by offering this high yield, it invites people to create products on top of it that just create this crazy loop of leverage.
Right.
And what do you see when it comes to the DeFi that's built on top of these things?
Yeah, no, I mean, this is the thing, and this happens every cycle. I don't need to share my screen for this instance. This happens every cycle. And what it is there's a lot of people at the beginning of the bear market that will refuse to admit that we're in a bear market. And they'll fight tooth and nail and say, no, it's not a bear market. Like, you're just you're fudding, you're just a bear, whatever. The people that are responsible for ending the bear market are usually the people that didn't believe in it to begin with. And the reason is because the people that it corresponds to, the end of the bear market, it's people that are forced to sell a lot of times, not people that decide to sell. It's the people that are forced to. And I don't know why I stopped showing my screen, because actually there's a chart I should show related to this. So let me just share this again. So it's basically this. If you look at the Bitcoin chart and you look at volume, right? So volume is a pretty interesting indicator for ending bear markets. Look at how the other bear markets played out, okay? So you had very little volume, and then what happens? Volume, you kind of hit a wall with volume, you see that? And that corresponded to the low. And then look at 2018, very little volume, and then you hit this massive candle, right? Like this massive volume spike. That was the end. Same thing in 2022, right? Relatively low volume. You did have a couple of spikes before the actual low in Q4, and those probably corresponded to like Celsius and Voyager and, you know, some of those other things that went down first. But until you got that volume spike in Q4, the bear market was not over. And so the argument is like, all right, you know, volume has still been fairly low for a while, and we haven't had like one of those major spikes. Like if you look at where the spike was at the end of, so look at these spikes. You have the spike that ended the, well, that's the wrong thing. You have this spike here that ended the 2014 bear market. You have this spike that ended the 2018 bear market, right? You can see, and the 2022 bear market. You can see we're nowhere close to that yet. Like we're just not. Like we're not at those levels yet. And so the people, I've been on a lot of like Twitter spaces and stuff, and there's a lot of people that really defend all these financial products as like, oh, well, you just don't understand it and that kind of stuff. But I think that a lot of those guys are going to be the reason the bear market ends, because they're going to be forced to sell. And listen, it doesn't have to be strategy. Maybe it's something else that we're not even thinking about right now. Usually it ends up being something else, but whatever it is, it's a forced liquidation that then is compounded by everything you said, all the stuff that's built on top, and it's just like a liquidation cascade, and then no one knows where it's going to stop, and it usually stops lower than what people think.
And I know we just have a few more minutes left here, but I want to get your take on sentiment. You've been in this space for a very long time. You track it. You have a platform that actually shows social interest in crypto and Bitcoin on social media, and you're a content creator. So what is your take on the vibe in Bitcoin right now?
I mean, honestly, people just don't. It's app complacency. Like, people don't care. I put out a video about this maybe a couple of weeks ago, and it was basically like Bitcoin was entering into the third and final stage of the bear market, where I essentially think of the bear market as separated into 3 stages, right? And ideally you become a bear in stage 1, right? Not stage 3. So stage 1 is, you know, right after the top, all the way down into the first low. So that's stage 1. And that's when a lot of people still don't believe, because you're still technically putting in higher lows and higher highs, right? Like technically that was a higher low. That's stage 1. Stage 2, it kind of starts from, you know, from this low, and I think goes to when you take out this low right here, right? So that's kind of stage 2. And then stage 3 is when you put in a new low right here, and then it goes to sort of like the final low, right? So you got stage 1, stage 2, and stage 3. So I think we're in stage 3 right now, where you should have one more counter trend rally before the actual low. I'm not trading that counter trend rally. I have no intent on trading it, because maybe there's not a count. Maybe we just capitulate out, right? I mean, just to give you an idea of what that would look like. You know how we made the comparison to 2019 earlier? Mm-hmm. If you actually compare this bear market to 2019, you can see how it followed it pretty closely, and then we had the pandemic drop, right? So if we were just to crash to 40K tomorrow, am I going to remain a bear until October? Absolutely not, right? I would say, all right, good enough for me, you know? But I also can't sit here and call for a pandemic-like drop, right? Because likely we're not going to have that. The only way that we would have a drop like this that I could see in the short term would be like if Stretch or something, if one of those products were to just bleed out like 80% or something, that might make things different. And then you would be looking for a higher low in October rather than a lower low. You would still have a low in October, but it would just be a higher low, more than likely. So if you look at sentiment, this is tracking views to various crypto YouTube channels. Right now, they're averaging around, 300,000 to 500,000 a day. Back in 2021, they were averaging 3 to 4 million a day. So you're talking about an order of magnitude less in viewership. Order of magnitude less. That's why altcoins are bleeding to Bitcoin, right? I mean, there's just no one here to buy the altcoins. And because they printed about 1 million more altcoins as well. If you take this chart and combine it with other charts like YouTube subscribers to these content creators, you can see that negative 1,000 a day is what it is right now, right? Negative. On average. And this is not everyone, right? Like there are some people that are gaining subscribers. There are some channels that are losing subscribers. Like there's some channels that just don't make content anymore, and so they're losing subscribers, or the nature of their content changed a lot. And so, but again, you can see that there's not a lot of new subscriptions to crypto YouTube channels happening right now. And so if you take that indicator with views and you combine it with stuff going on Twitter, right? And let me just show you one quick Twitter one, or X. It's Twitter to me, but this is new followers to various crypto analysts on X. You can also see it's very similar. Like, there's a huge surge in 2021 and nothing really since then. So if you combine all that together and with maybe 3 or 4 more social charts, and you create a risk metric for social, and you create like the social risk metric, it looks like this. And so you can see that social interest has been trending down since 2021, right? Mm-hmm. So my argument is that this entire move here is just a larger version of what we had over here, right? Where it was just trending down, and then it started to go back up after interest rates dropped back down a lot, and after the money printers really came back on. The problem is that the printers can't come back on, rates can't drop until you get a correction in the stock market. And by the way, we're likely approaching a correction in the stock market. Usually you get a correction in stocks in the second half of the year. It can start in August or September is a lot of times when it starts. Like in 2018, it started in September. In 2022, it started in August, And so I would guess you're going to get a correction in stocks in the back half of the year, and that's going to lead to some of the maybe policy getting a bit looser. At least not immediately, but maybe some of the rate hikes will get priced out if you get that correction.
And you get labeled as a bear, but you're just being pragmatic, right? And you're looking for indicators to show you when to flip bullish again. You don't think Bitcoin's going to zero. You're just looking for the next bull market to start. And that is why you put your conference in November of this year, your first conference. So
right. Yeah. I'm hoping the lows in by then. I mean, it makes for a much better conference. I thought about doing it last year. What I'm going to say, sorry guys, nothing to see here. See you next year. I mean, no, I don't know. I mean, the conference is more than just Bitcoin. Like we're going to talk about other stuff too, but obviously I hope Bitcoin is the main theme, because it'd be great if I could go to the conference with like a clear conscience of, all right, the bear market is over, and let's get bullish again, Mm-hmm. There's actually another really interesting chart, if you have a minute, I could show.
Yeah.
Let me see if I can find it. It's I'm not talking about politics, I want to be clear, but it just shows you the path of Bitcoin under the last administration, under Biden, and then now under Trump. And I just want to show you how closely they're aligned right now. So if you look at Bitcoin under Biden, the blue line, and then under Trump, it's basically the same area, right? And so what happens is, volatility just died out, and then we got the final drop in Q4, and then the bull market began. So that's what I'm thinking is the most likely outcome here, is that we sort of form the low in this region, and then we start the next bull market. And by the way, I mean, I think there's a good chance that social interest could bottom late this year. Because I have to believe that if you're going to stick around for 2022 and 2026, and you've already, and they've all seen the altcoins basically go into zero, there was no alt season, I just have to imagine that the people that are still here in 2027 are probably not going anywhere, right? Like they're probably going to stay here. So at that point, I think social risk will likely bottom, and we'll start to see a trend back up.
Yeah, the only people left are those with greater motivations than just price action, right?
There's dozens of us left.
Yes. And we're here to talk to them.
Right.
Ben, thank you so much. That was a very informative time you gave us here. If people want to follow more and see where you do your work, where should they go?
I have a YouTube channel, so just Benjamin Cowen on YouTube, or you can go to benjamincowen.com.
And the conference is coming up in November, so be sure to check that out.
Thanks for having me here. It's a pleasure to be here.
Yeah, very much. Cheers. See you soon.
Bye.
Thank you so much for making it to the end of this video. Hopefully it helps you understand how this bear market has played out and why we can be looking forward to the fall for the beginning of a brand new glorious bull. If you want to go further, check out this interview we did with Will Reeves, CEO of Fold, the Bitcoin finance app, to figure out why this bear market feels so different, what the real vibe is on Wall Street for Bitcoin, and how Fold is helping people build their whole entire financial life on a BTC standard. It was a really fun conversation. I'll see you over there.